Hi folks, I want to talk a little bit about some other incentives and organization-wide incentives in this video. So some other incentives that companies might have that are part of pay for performance might be merit pay or what we call merit raises. Largely these go to non-union employees and they're tied to how well you perform. And we gave an example of this earlier. Let's say for example, we have somebody making $30,000 a year. Maybe they're going to get a 4% pay increase, which is going to give them an extra $1,200 a year. So now they're going to be making $31,200. But that 4% that they get is going to be tied to how well they performed, right? Some people would say, well, money is one thing, but maybe I get more of a charge or I'm more motivated by being recognized by my peers or get support for publishing work. That's sometimes common amongst university professors and some scientists, right? Some people might get motivated by getting better equipment to do their job. So let's say, for example, a company is cutting back on maybe merit pay for employees, but maybe every year they get new computers, or maybe they get company cell phones or something. So maybe they get better equipment to do their jobs, right? So sometimes it's a trade-off. It depends on what an employee really values in their job. Do they value having more of maybe the equipment and what they need to do a better job in the workplace, or would they rather have the pay? Right? So I'm not saying companies always force you to choose, but sometimes companies try and balance those things as opposed to, giving them everything, because companies are trying to be cost effective, right? And there are also what we call organization-wide incentives. So companies, as we said before, could share in the profits of a company. So maybe profit sharing plans, so where most or all employees share in the profits. So again, back to our example earlier, maybe a company makes $1 million in profit this quarter. They keep 800,000, and maybe there's 100 employees in the company, and they get that 200,000 split amongst them, right? That's a pretty nice incentive to have for those people. But again, that's just something that they can have, right? If a company has profit sharing. And sometimes instead of that, or maybe together with that, they might allow employees to buy stock in the company. So what that means is that sometimes from your pay, you might say, well, I'd like 3% or 4% of my pay every week, every other week, or every month, depending on how often you get paid, to go toward buying stock in the company. So if you did that, say you get paid once every 2 weeks. If you did that every 2 weeks and you were at the company for 5 years or even 10 years, you could have quite a bit of stock saved up in your name. And of course, if you were to leave the company, they would distribute the stock to the employees once you leave the company, right? So you would get your stock, be able to take your stock with you when you leave, and then whatever the stock price is at that time, you'd be able to cash that in or hold on to it, right? So you get to take that with you when you leave. And the point we're making here is that there's a trust that holds the shares of the company. So say your company deals with, say for example, Royal Bank of Canada, or they deal with TD Waterhouse or something like that. The company would be buying the shares on your behalf through TD Waterhouse or through Royal Bank, whoever, so that they would be holding those shares. The banks would be holding those shares in trust for you in your name, so that when you want to cash them in, whether it's before you leave the company or even if you're leaving the company, maybe you haven't touched them, right? And you've been at the company 5 years, 10 years, then you can take the stock, okay, with you, and then you can decide what you want to do. So the trust, the banks, TD Waterhouse or RBC, they will send the stock to you, and then you can do what you want with them. You can cash them in, you can hold on to them, you can do what you want. Okay, so that's just another option for you. So now, let's talk a little bit about other recognition plans, other incentive plans, specifically employee recognition plans. These are usually plans that don't cost the company a lot of money, but employees really want to see. So it doesn't mean that they're going to give up their pay increase. They want to usually see these along with some kind of pay increase. But normally what we find is that when companies are cutting back on the amount of cash payments they give as increases, they tend to give more in employee recognition. So in our next slide, our next video, we're going to go through some of these recognition programs.